always you see on that seasonals in all markets. Clearly there's in gold around Diwali and things like that, and festivals, and then it's clearly in energy because of heating demand and sources like and driving season, and very clearly in ags because of seasonal things. Now, Bitcoin also, I've heard, and one of the highest correlations is to the stock market because it is a risk asset. But fact is, this is this time of year. It has a tendency. November is one of its best months. There was actually one year, I think it was November 2013, was a major distortion. It was up 400%. So you have to be careful with that. But we look at some of the biggest bull years. Last year was a really good period. In 2017, of course, that put in the peak. But I think it's also psychological. It's a time of year that, okay, if you have not been allocating to it, if you haven't outperformed the market, and you got to pad your books a little bit. And this is one of the best performing assets in history of mankind. Bitcoin and Ethereum out there to get it. So the way I like to look at it is, if you hold gold and bonds, you're kind of naked. You don't have some Bitcoin in that space. And you got to have some Ethereum too. And I sense on a global scale, every single money manager on the planet all knows the pendulum's completely swung. Okay, I can no longer claim it's silly internet money. I can't be ignorant. I have to at least, why take the risk of grandpa or grandma? Why weren't you involved with the biggest asset class transformation in history of mankind? Versus if you lose 1 or 2%, not a big deal. To me, that's what's happened. The pendulum swung. Every asset manager gets it, and they're finally just getting the vehicles to do it efficiently. That's what an ETF in the U.S. did. It added legitimization. It's not a good vehicle to do it, futures based. You have to pay into the contango, but it opens up massive cash and carry. Anybody who holds Bitcoin, who can buy physical Bitcoin, sell the futures, and just roll their futures, has almost virtually risk-free money. Last year was 20%, and not including slippage. Now it's priced in around 10%. That trade has to be done. I just look at it. If I wasn't here and I could run a hedge fund, that's what I'd be doing. You leverage up 5 to 10 to 1, and you don't have to take directional risk. Just do the Bitcoin or Ethereum cash and carry against futures. Those are listed futures. That has just massive inflows, and it just adds legitimization. And what I've heard is family offices, pension funds, endowments, and you name it, all have to have some exposure in their early days, and they just don't have good vehicles to do it, but they're coming fast. And that's the way I see the whole macro of the space developing. And then you have this incident with the situation where I have to admit, Justin, I never even dreamed of. It's become in the vested interest of the U.S. to adopt cryptos with proper regulation, because it pushes back on our arch rival now, which is China.